A tremor is moving through the financial world today, carrying news that could be profoundly significant for those tracking the Iraqi Dinar and the Vietnamese Dong. Reports are circulating widely that Chase Bank, a colossus in the global financial landscape, is allegedly making preparations for an uptick in activity surrounding these two currencies, often classified as exotic. For many years, a patient community of investors in currency analysts has been searching for any tangible indication that major banking institutions are starting to view the dinar and dong with a serious operational focus. That long-awaited moment, it seems, may have finally arrived in late 2025. The core of the story centers on an unconfirmed internal update reportedly distributed within Chase Bank's foreign exchange departments. This communication, if accurate, signals a shift in the bank's operational approach regarding how these particular currencies are managed and monitored. The sheer scale of Chase Bank's operations lends considerable weight to this development, prompting a single, fundamental question that is now echoing across financial forums. Does this administrative preparation suggest that a revaluation, a significant adjustment in exchange rates, is on the horizon? We intend to meticulously unpack the potential implications of this reported shift and explore why it is being labeled as one of the most compelling financial stories of the current year. To establish a clear context, we must first address the specifics of the alleged internal action. Multiple sources tracking financial institutions claim that Chase Bank recently shared a memo with its specialized foreign exchange and investment teams. The reported subject was a new, heightened focus on exotic currency monitoring and review. Crucially, the Iraqi Dinar and the Vietnamese Dong were specifically cited as part of this enhanced review process. This kind of internal adjustment is not a commonplace occurrence. For years, prominent U.S. financial institutions have maintained a notable distance, remaining largely non-committal, and avoiding public policy shifts regarding these niche currencies. The significance of this purported internal communication lies in its suggestion that Chase Bank is dedicating more attention and resources than ever before to these two assets. Historically, major banks do not typically allocate resources toward a specific currency unless they internally forecast an expectation of increased transaction volume, greater client interest, or potential volatility in the market. The very act of a banking giant like Chase taking operational steps tells currency watchers that something is changing in the environment surrounding the dinar and the dong, a development that is naturally generating considerable excitement within the investor community. This situation presents a compelling dichotomy. Is this reported move the precursor to a major market event? Or is it simply a cautious administrative measure designed to enhance risk management? Regardless of the primary motivation, the mere signal emanating from such a respected institution is demanding attention. To fully grasp the intensity of the stir this news is causing, one must understand the unique historical narratives attached to both the Iraqi dinar and the Vietnamese dong. These narratives underpin the persistent speculation that drives investor interest. The Iraqi dinar has long held a singular position in global speculative circles. Following the severe economic disruptions in Iraq in the early 2000s, the dinar's value dropped precipitously. Since that period, a large global community of investors has been patiently anticipating a significant revaluation, a dramatic increase in value, often at the hand of the government or central bank, which could theoretically yield substantial returns for currency holders. This anticipation has driven the dinar market for over 2 decades, making it a unique global phenomenon in currency speculation. In contrast, the Vietnamese dong possesses a very different yet equally compelling storyline. Over recent years, Vietnam has been steadily establishing itself as one of Asia's most rapidly expanding and dynamic economies. Correspondingly, its currency has demonstrated a gradual, consistent trend of improvement and stability, reflecting the nation's economic strength. Both Iraq and Vietnam harbor considerable economic potential, and their respective currencies have successfully attracted a broad spectrum of speculative interest. The reported involvement of a major U.S. bank, such as Chase, introduces a level of perceived legitimacy and mainstream visibility that has been unprecedented until now. What makes Chase Bank's alleged internal activity particularly intriguing is the internal expertise that such institutions possess. Banks like Chase, along with peers such as Citi and Wells Fargo, employ highly specialized teams dedicated solely to risk management and sophisticated foreign exchange forecasting.
When these teams begin to allocate more rigorous attention to a particular currency, it frequently suggests that the bank's internal models anticipate potential shifts in market dynamics, such as changes in overall trade volume or an increase in price volatility. The reported action of Chase preparing its internal systems to better handle Dinar and Dong transactions could be interpreted as a sign that they are expecting a surge in trading interest from various client segments, or perhaps even an imminent structural adjustment in the official exchange processes managed by the respective central banks. However, it is paramount to acknowledge the cautionary perspective from financial experts, who rightly emphasize that operational preparation does not automatically equate to market prediction. In a simpler interpretation, the bank may merely be ensuring its operational readiness to service existing and potential investor activity, without having any inside knowledge or confirmation that a revaluation event is a certainty. Nevertheless, in the highly sensitive and rumor-driven world of currency speculation, even small, administrative moves by a colossal financial institution can be enough to ignite significant waves of optimism. This is especially true when discussing the potential returns that speculative investors often fixate upon. Figures such as $7.90 for the Iraqi Dinar and $5.78 for the Vietnamese Dong are frequently circulated in online communities. It is crucial to understand that these figures do not represent any current official exchange rates, nor are they prices set or guaranteed by any bank. These off-cited numbers are purely speculative projections, derived from models and beliefs about what could happen if these currencies were to undergo a significant revaluation or adjustment designed to reflect an idealized, much stronger national economy. Iraq, with its vast and globally important oil reserves and its developing international trade agreements, is often viewed as a nation with the underlying resources capable of supporting a substantially stronger currency value. Simultaneously, Vietnam's consistent rise as a critical global manufacturing and export hub offers an equally compelling narrative for a steady, long-term appreciation of the Dong Da. However, all observers and participants in this market must maintain the perspective that these projections, regardless of their source, are educated guesses at best. They carry no guarantees of execution or timing. The practical implications of Chase Bank preparing for increased Dinar and Dong activity are significant for the market infrastructure itself. Firstly, this operational readiness would logically make it considerably easier for the bank's customers to either exchange, purchase, or hold these currencies via established official banking channels. This level of transactional accessibility has been notoriously limited, particularly within the United States market. Secondly, and perhaps more importantly, this move could potentially open the door for large institutional investors, hedge funds, major money managers, and corporate treasuries to begin including these currencies in specialized compliant portfolios. When a major bank initiates the clearing of trades or offers direct, scalable access to a particular currency, it serves as a powerful signal to the global financial market. It suggests that the asset has achieved a new and higher threshold of perceived legitimacy and operational readiness. In essence, an asset that was once broadly characterized as a fringe or niche investment could be taking steps toward becoming a more mainstream, institutionally recognized trading instrument. It is equally important, however, to recall that banks' preparations are deeply rooted in risk management. The foreign exchange markets are inherently capable of rapid and unpredictable movement. Should there be even a small possibility of a rise in trading volume and corresponding volatility, massive institutions like Chase are obligated to take proactive steps to safely and compliantly handle that potential activity. These operational preparations could involve a range of internal actions, such as implementing new compliance measures, upgrading software systems designed for foreign exchange, or conducting staff training on enhanced anti-fraud and anti-money laundering procedures related to exotic currencies. Therefore, while the reported memo clearly suggests growing internal interest and readiness, it does not in and of itself confirm that an official government action, such as a currency revaluation, is currently underway or imminent. The readiness is about the bank, not necessarily the central bank. To truly contextualize the current speculation, we must consider the economic realities within Iraq in 2025. Iraq has successfully made substantial strides in the revitalization of its crucial oil industry. achieving better stabilization of production and actively managing the reduction of its international debt obligations. The Iraqi government and associated entities have also been strategically expanding partnerships with key international energy companies from the US, Europe, and Asia. These concentrated efforts have collectively strengthened Iraq's standing in the global market and helped build a necessary level of confidence in its nascent financial institutions. Furthermore, the Central Bank of Iraq has implemented a series of monetary reforms, explicitly aimed at improving overall monetary stability and financial transparency. These are definitively positive macroeconomic signs that create a supportive and credible framework for a potentially stronger dinar in the future. Nevertheless, the ongoing presence of domestic political challenges and underlying regional conflicts continues to pose material risks that could still potentially delay or impose limits on the pace of any currency appreciation. The path forward remains subject to these critical non-economic variables. Vietnam's economic narrative, while different, is equally compelling in its support for the dong. The country has solidified its position as one of Asia's most attractive destinations for foreign direct investment and high-volume manufacturing. Major international companies are increasingly relocating production facilities to Vietnam, attracted by competitive operational costs and advantageous trade access. This sustained, powerful economic expansion has fueled consistent gross domestic product (GDP) growth and has allowed the nation to successfully build up substantial foreign currency reserves. The Vietnamese government continues to pursue the modernization of its financial policies and is investing heavily in infrastructure improvements. These sustained pro-growth actions establish a strong and credible long-term foundation for currency appreciation. However, most financial experts specializing in the region agree that this appreciation is far more likely to occur through a gradual, evolutionary process reflecting organic economic growth, rather than through a sudden, dramatic, government-mandated revaluation event. The two countries present fundamentally different currency stories. It is helpful to pause and define what a currency revaluation genuinely entails. When a country officially revalues its currency, it is more than just a change in a numerical figure. It represents a major government-backed official adjustment to the predetermined exchange rate. This momentous action is typically only undertaken when the fundamental economic indicators and health of the nation have improved sufficiently to fully justify a sustainably stronger currency value against global peers. The entire process of planning and executing a revaluation often spans many months, sometimes years. Central banks responsible for such a transition typically coordinate meticulously with major international financial organizations to ensure the transition is managed with maximum stability and minimal disruption. This is not an action that is subject to a rapid overnight change, nor is it ever triggered by mere public rumor or market speculation alone. Nevertheless, a key point to consider is that large, sophisticated global banks often begin their internal operational preparation well in advance of any public governmental announcement, positioning themselves for change. The core takeaway from the reported activity at Chase Bank is the insight it provides into institutional expectations. The fact that the bank is reportedly monitoring the dinar and dong with increased scrutiny suggests that the institution is anticipating a measurable rise in demand from its customer base, encompassing both individual retail investors and large institutional clients. This demand could be driven by investors motivated by the long-term hope of a revaluation, or by businesses that are actively increasing their operational or trade presence within these specific national markets. In either scenario, a large, resource-conscious institution like Chase Bank does not allocate its operational capital or employee time without a clear and justifiable business purpose. The bank's sophisticated internal systems, its compliance and legal teams, and its global risk departments are all likely engaged in analyzing a spectrum of potential market scenarios. Whether this reported action is ultimately confirmed as a purely cautious, defensive move or as a clear signal of deeper, proactive market preparation remains a key point of ongoing financial observation and debate. Naturally, a degree of skepticism persists among market observers. Some seasoned analysts contend that these alleged internal moves are simply precautionary measures, designed to ensure that Chase is appropriately managing its exposure to potential volatility, which is a standard banking practice. Conversely, others believe that this development aligns with a broader, emerging trend where major global financial institutions are beginning to position themselves for anticipated fundamental shifts in global trade flows and the eventual maturation of key emerging market currencies. As financial history has often demonstrated, significant shifts in long-term currency trends typically begin in a quiet, subtle manner before they eventually gain widespread global attention. If the reports are accurate and Chase is indeed positioning its infrastructure for a future increase in activity, it is a development that other major international banks may soon feel compelled to follow. Such a cascading effect could trigger a substantial wave of institutional interest, which would, in turn, inevitably impact market sentiment and the psychological dynamics surrounding these currencies. However, a fundamental piece of advice for all investors must be stressed: proceed with extreme caution. Currency speculation, by its very nature, carries high and unpredictable risks. Exchange rates are highly sensitive and can fluctuate dramatically and rapidly due to unforeseen political instability, unexpected inflation shocks, or sudden shifts in global market sentiment. The mere fact that a major bank is operationally preparing for possible changes does not, in any way, represent a guarantee of future profits for existing currency holders. Many respected financial experts consistently caution that any investment in highly speculative currencies should only ever represent a small, manageable fraction of an individual's total investment portfolio. Specifically, it should only be capital that the investor can realistically afford to lose in its entirety. Responsible investing mandates a comprehensive understanding of both the potential for significant upside returns and the very real and present risks involved. It is always wise to balance high-risk, speculative opportunities with safer, proven investments, such as diversified index funds, government bonds, or established blue-chip stocks. Another absolutely vital aspect of engaging in this speculative market is the critical need to avoid the pervasive presence of misinformation and financial scams. Whenever speculative currency investing captures broad public attention, it inevitably attracts dishonest and predatory actors who seek to exploit hope and lack of knowledge. They frequently make dangerous and misleading claims of insider knowledge, guaranteed profits, or secret revaluation dates. These types of promises are, without exception, illegitimate and should be instantly dismissed as major red flags. Genuine, reputable financial institutions and central banks do not provide such sensitive information to select individuals in advance. Legitimate reevaluations are carefully planned and always announced publicly and officially by the issuing central bank or government authority. If an individual or an online source claims to possess exclusive access or pressures one to buy now before it happens, it is a certain indicator of a scam. The only safe and legitimate path for engaging with these currencies is through well-established, reputable dealers, licensed foreign exchange brokers, or official banking channels, never through unverified online sources or private, anonymous transactions. Looking forward, investors and analysts must continue to closely monitor the most reliable indicators of actual currency movement. The most authoritative and important signals will always come directly from the governments of Iraq and Vietnam, as well as from their respective central banks. Official statements regarding national monetary policy, the level of foreign reserve holdings, and any formal adjustments to the established exchange rate carry exponentially more weight than any rumor or online post, regardless of its source. Other material and key signs to watch for include the formal execution of new major trade agreements, measurable surges in foreign direct investment into either country, or significant sustained improvements in export strength. If both nations continue their efforts to fundamentally strengthen their economies and dramatically improve financial transparency and governance, the long-term potential for their currencies to appreciate will continue to rise. This long-term strengthening is the true foundation of any sustainable value increase. At the same time, the indirect, yet powerful, role of major international institutions and banks like Chase cannot be dismissed. Their operational preparation signals where professional investors are beginning to direct their research and focus their attention. As the necessary financial infrastructure becomes more robust and widely available, such as the confirmed ability to smoothly exchange or hold these currencies through official major banking channels, interest from both the retail and institutional sectors will naturally increase and deepen. Whether this increased infrastructural readiness ultimately leads to a dramatic revaluation or a more gradual USD IND appreciation remains the central question that market participants are currently grappling with. But one fact is definitively clear: the conversation around these currencies has permanently shifted. What was once widely dismissed as niche speculation is now demonstrably becoming a subject of legitimate operational planning within the world's most powerful financial institutions. Is this, finally, the seminal breakthrough moment that the long-term Dinar and Dong investor community has been anticipating? It is a distinct possibility. Chase Bank's reported renewed focus undeniably adds a layer of institutional credibility and is creating real, palpable momentum in a market that has historically been characterized by extreme uncertainty and a lack of official institutional access. It is true that it may still require a substantial amount of time, months, perhaps even a few years, for any truly major market movement to be realized, yet a fundamental new dynamic is actively developing in late 2025. The world's largest and most conservative banks do not undertake substantial policy and systemic adjustments without a compelling underlying reason or justifiable forecast. Regardless of whether this reported action ultimately culminates in a major structural revaluation or simply a much better prepared global financial system for these currencies, it is an undeniable milestone that warrants serious recognition. The next few months promise to bring more clarity, and this channel will continue to provide diligent, fact-based updates every step of the way. We invite you to share your perspective on this massive update from Chase Bank. Are we, at last, seeing the first real and substantial signs of movement for the Iraqi Dinar and the Vietnamese Dong? Share your thoughts. If you found this report to be helpful and informative, please show your support by hitting the like button and subscribing to the Dinar Daily for the latest updates, objective analysis, and crucial financial insights. The path ahead is filled with possibilities, and as global markets continuously evolve, information remains your single greatest asset. Stay informed, remain appropriately cautious, and stay tuned, because this major financial story is clearly far from its conclusion. Thank you for watching, and we will be back with your next update soon.